Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day market recap for Tuesday, the 25th. Reminder: tomorrow is a full day. I almost want to say tomorrow should be a half day, but tomorrow I think tomorrow should be a half day. But that's a whole other thing. Tomorrow is a full day, and then Thursday's markets closed for Thanksgiving, and then Friday is a half day, closing at 1 p.m. So just a reminder there, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Before I start, I did mention in yesterday's video that we do have a special. I have it running across the screen. It's basically like an end of month, not end of month, end of year special or Black Friday type sale that we're running. And this is with the MarketWebs as well as the trading room. So you could get the indicator via TradingView. Now you do have to pay for a TradingView subscription, but here's the special that we're running for the end of the month, or for the, I'm sorry, I keep saying this wrong, for Black Friday. You're basically get 2 months of both. We're bundling that together for the price. You get 2 months for the price of one. So that's the special that we're running. You get all the analysis that we do on a on the fly rather than kind of end of the day summary. So you kind of get more of a feel for what's going on. You also get the watch list that I put together, which I try to really set that up based on where we're seeing strength and where we're seeing opportunity in the market. So the link is on the bottom of the screen. I know that's difficult. I don't think you could click on that, so we'll go there. So it is also on my Twitter page. I also want to just start with this because I think it's important. So let me just flip the screen and we'll go through this quickly. All right, let me see. Just move this so that you can see this. Just to recap what I've been talking about the last couple of days, yes, there's an 80% chance now that they're going to cut interest rates in December 10th. That is the main reason why we've rallied back. We dropped all the way to a 30%. This was on Thursday, and now we've ratcheted up to an 80% chance. And the market has responded. Things that are very sensitive to what the Fed is doing, like small caps, have rallied hard. Also, more of your speculative assets have bounced. The Bitcoin, the IBD 50 ETF, but the small caps are one of the best gauges of what's going on with the Fed, if they're dovish or hawkish. Now, another thing that came out today was that we heard who possibly could be the new next Fed governor, and that's dovish. That's Hassett. And again, I'm not an expert on all the Fed governors, but I know that's a dovish one, and hence the market took that information and kind of ran with it. So look at the performance today. Some different areas of the market really doing some of the heavy lifting for the day. The home builders were up 4.7% for the day, right? Just like on Friday, right? Friday was the first move that we saw, right? When we heard Williams come in the morning and say that he thinks that a rate cut could happen, and home builders outperformed on Friday as well. So again, this is all like snap back based on what rates are doing. TLT, by the way, was up 0.3 of a percentage point, and so was IEF, which is the 7 to 10 year bonds. I'll go over those charts first, but I just want to recap this. Retail, by the way, has had some really good, as of late, has had some pretty darn good earnings reports. And this morning, that was kind of one of the catalysts. But look at the XRT ETF. We don't normally see that happen. That was up 4.5% today. Clean energy, healthcare, and biotech, once again, super strong. Medical devices getting involved this time, but PPH out to new highs. The semis, and this is kind of saving right now what's going on in some of tech, which is just kind of has been underperforming as of late. The semis were down again this morning. They were down about 2% today. And I think all the dovish language really kind of helped the semis out. So you could see still one of the worst performing groups for the day. They did rally 1.6% from the open. So they opened lower based on this NVIDIA stuff that's going on with Google. And with NVIDIA saying we're not Enron, which I mean, I don't know. I'll let somebody else write the jokes for that one, but I cannot believe that's what that is a statement that they're going to make, but that's a whole nother thing. I'll try to review that chart as well. Utilities underperformed a little bit. But like, it's good to see some of these other areas kind of pick up a little bit, which have been lagging. Like even uranium stocks were up today, and that's been another area that's been underperforming. Here's the medical devices that I mentioned too, up 1.8%. So lots of charts to go over. I'm going to go right to them. Yeah, let's go. Let me start with the bonds because I think bonds have such amount of implications. Now, a reminder: the Fed does not control the long end of the curve, so please don't get that confused. Sometimes it does help when when it says that the Fed is going to be dovish. Remember the rate that they control, right? That they artificially set is the overnight rate, right? So the shortest interest rate out there. This the Fed has nothing to do with, right? This is plus 20-year bonds, which move on supply and demand. But when the Fed moves, or when the Fed funds rate does move, it usually affects the long end of the curve too, even though that's kind of really not how it usually works, but it is. This is still sideways. Remember last week we did see a very large call buyer. It was a call spread looking for TLT to go up to here next year. What I like better is IEF, right? This is the 7 to 10 year bond. I get it. Everybody looks at the TLT because it's easier to remember, but there's a lot different movements that are happening depending on what maturity of treasuries that you're looking at. And for instance, the 7 to 10 year bond ETF is making a new high for this year. It's not making an all-time high, but it's making a new high for this year. So again, you go further down, lower duration. Here's SHI, for example, right, which is 1 to 3 year bonds, and you could see how much of an uptrend this is in. So plenty of bonds are in uptrends. It's just not it's just not the longest end of the curve. All right. So again, mentioning this because it has a lot of implications about sector rotation and things going on here. Let's go right into the indices. SPY. Very good news here. We're back above the 50-day moving average. I, for one, was worried about this, but we're moving back above the 50-day moving average. We also have some stronger seasonality too, which is also like Tinder right now for this market in terms of, the Fed, uh, some of the Fed governors pivoting, right? And also we've got strong seasonality here. So we're back above the November value area. So we've had a dip. We had this nasty looking candle that happened on Thursday. We've come back and the dip has been bought to some extent. That's where we are. And I would watch this top of the value area for the rest of the month, 672.82. Also looks like the December value area that's still forming because we still have what, three more trading days? 2 more trading days, well, day and a half of left of December. But here's what the December value area is mostly going to look like, right? That was SPY. This is Q. Not quite as strong, but coming back, still inside the value area. Did close right above this 50-day moving average, which is right here, but still has some work to do. And here's IWM, which has made one heck of a move. Unbelievable. So again, remember, right? Fed says here they may not cut interest rates in December. Whoop, right? And then all of a sudden they pivot, and IWM is right back up there, right? We could also look at IWC as well, which is the microcap ETF, also responding quite well. Here's the diamonds, right, which is also back above the value area and all these moving averages. I just want to highlight RSP as well, which made a big move. Today, back into the value area. Little bit of a baby head and shoulders there. It did break that neckline only for one day and then moved back above. So good to see that. RSP was not in favor yesterday. It was more about the Qs bouncing back yesterday. But today, I like what's happening here. So I mentioned I would go through what chart do we want to go through first? In terms of some things, I'm going to start with things that have just been acting really well, and then we'll go and we'll look at some of the value stocks. But this is PPH. I've mentioned what the pharmaceuticals have been doing quite a bit. Look at the move that this had today, and I got long here, and I actually added to when yesterday it was just a tiny bit weak. I was buying some things that were red yesterday. That were down just slightly yesterday because I thought yesterday was kind of more of I don't want to say a one-day thing with the Qs outperforming, but I just thought that they were due. And I thought we might just see these things like this rotation that we've been seeing continue. And look at the move here in pharmaceutical stocks today. So this is PPH. It's not a very big ETF, right? So if you want to look at the movers of this really quickly, I'll flip the screen here for you so that you could see what performed well in this. Merck was up another 5%, by the way. Remember, we saw big call buying in that a few weeks back. Lilly up another 3.7%. It's good. I put it in the TTG trend portfolio. McKesson, OGN, which is a $7 stock, was up a lot. NVO was up 4.6% today. Court, NVS, Novartis, which I actually got long this name today. So I'll go through. We saw some call buying in Novartis today. Right, nice sizable call buyer. So again, this is not a so if you're looking for something in the space that's not extended right now, this is a nice methodical trend, and I like some of these. Right, Novartis is European. Yeah, it's an ADR. So hey, just above the 200-day moving average, and if the trend is going to continue in pharmaceutical healthcare stocks, then I like the positioning. And again, that Merck was a heck of a trade that we saw. Look at what Merck has done since. We've now taken out all these VPOCs, by the way. That was kind of, if you've watched my videos previously, I've mentioned Merck before, and I thought maybe this could get up to the bottom of the value area. So big counter trend type move. Well, it's not counter trend because it is above the 200-day moving average, but it's battled through all that overhead supply, but I'm guessing this might chill out in here. That's Merck. Some other names that people are really talking a lot about is what's TMDX. Right? I don't know why everybody loves this one so much, but they do. It's a very popular one. Maybe because I think back here, for a while it was a big growth stock, but there's better things out there. Of course, and Lilly has been absolutely on fire. This has been, I think, the strongest name out there in pharmaceuticals and in healthcare. MDGL is another one that I don't know why that many people talk about. We were just talking about this on in social media last night because I know someone who's been talking about this name for a couple of years. But look at the move in this stock, right? These kind of things have been your market leaders. IHI, medical devices. I put this in the TTG trend portfolio yesterday. Yes, I'm a little bit worried about that VPOC being taken out and it stopping here. If it can manage to get through this VPOC, look at the weekly chart in medical devices. Right, this really has taken from being such a powerhouse, right, in years past, right, huge uptrend, and sometimes we see this, right, we see this long uptrend like this, right, and then we kind of consolidate for a little bit. So look at the weekly chart in medical devices. After it's been kind of just taking a break since basically the highs of 2021, now it may look to, if it can get through here, I have to say that this is one of the most interesting charts right now, right? Is your medical devices. Remember, this also went down on trade tariffs, and we've been hearing a lot. If you've been paying attention, there's been a lot of walkback of these tariffs. I don't know if the walkback is because of that there's a judge that's going to rule on them and they're slowly kind of taking some of them off, or if they've just gotten the trade deals that they've wanted and they're kind of taking things off. But I really like this chart here, and hence I did stick it in the TTD trend portfolio at about a 3% weight yesterday. All right, so that was very interesting. Then retail. This is just the weekly chart. I would not go long the XRT because it's equally weighted and you're going to get some good companies and bad companies in here. But, there's another one that just reported after hours, which is Urban. Whoops, sorry, EUBRN. Again, this thing sometimes has really good earnings reports, and this is up to 77. Right now, this has been the trend, right? Or one of the trends. Look at what Gap did today. Huge move, up 7% today. They had earnings last week. Now you do have to. It did stop, I think, at the Gap, and I wouldn't get long that one. But yesterday, like I said, I was looking for things that weren't really going crazy. Look at what TGX did today. was up 2.4%. Again, not not up 7-8% like a growth stock, but the trend is very strong in these things. Ross Stores also had good earnings. They tacked on some more gains. Now they're a little bit extended here after that big green candle, but that's a breakout. These are things that you might be that you might want to consider to buy on dips. Also five, right? So more of like things that are kind of discount stores look pretty good as well. So I think that's kind of interesting. Then I would say look at the travel stocks, and I highlighted a couple of these things yesterday. Remember, I highlighted LVS and Las Vegas had their data that came out today that showed that their tourism is increasing there or better than expectations. But look at what LVS is doing. Also, look at the hotels, right? And again, I showed these in at the very end of yesterday's video. But Marriott, Hilton, Hyatt, right? They tend to kind of move together, and that's what they're doing right now. So to me, and like I don't usually trade the airlines, but the Jets, Jets, had a very nice day as well. Viking, which reported earnings last week. The stock dipped a little bit yesterday. I don't know what was going on with the cruise lines, but the travel and leisure stocks all of a sudden have come back, and some choice restaurants too. Brinker has been strong. That's come back from the dead, basically. That stock was all the way at $100. It's a 48% return in a couple weeks for Brinker. So, there's definitely some pockets of strength. I traded Rocket today just because of the move in the home builders. I took a couple targets in this because it was up 8.5% today. Ultimately, I'm looking for the stock to go to 2036 in this. Open hasn't really done much. I've always liked Rocket better than Open, even though all the hijinks going on there in Open Door. But watch to see if it can break above the value area, see if it could get a squeeze. 860 is the level to watch there for a break higher. Here's what the overall home builders do look like. They had a huge day. I mentioned earlier, up 4.2%. Right, and ITB. Right, so different things than different things than your AI stocks. And I think that this is pretty good. I like this. I don't like when the market is so fixated on one stock. Now, NVIDIA held in there. It went all the way down to 170. And yes, buyers came in. And again, I think this is a quality name. I just think I'm ready for the AI theme to kind of, I'm not saying be done or anything like that, but at least for some other areas of the market to outperform and the AI to kind of take a back seat. And I'm not going to go through that conversation again, but you can review yesterday's video where I just talked about how there's a lot of competition. And I like when breadth widens out and there's some other things that are performing so that we're not just hooked into what one stock is doing. And if that stock is going down, it takes down all of all of the semiconductors and all of uranium stocks and all of the data center stocks and all of the rare earth stocks. I mean, that's not a very healthy market. So I still like things which, again, we're not the best performers today, but Light had a humongous day yesterday. So let it consolidate, let the 5-day moving average kind of catch up a little bit. What else on my watch list out of tech was very strong today in this space? I like Taiwan Semiconductor. Not Taiwan's Tower Semiconductor, right? Again, a couple of names that people aren't watching as much, that not everybody has eyes on. Here's what our watch list for the week looks like, that you get every weekend from me. Here's Tower Semi, had a big day today. NU had a nice breakout today, which was also part of our watch list. Here's Rocket, which I added. Sphere, another Vegas name. What else did I? Grail took. So we'll review that chart too. So some of these names that outperformed really well yesterday, they kind of just took a little bit of a day off, and that's perfectly fine. Like, you actually want that to happen. So Grail was a name that viewed yesterday, right? Just kind of coming in a little bit, right? Make give an opportunity. It's good to see some digestion here. So watch what this thing does. If it kind of slides in maybe another day and the volume comes in, might set up pretty nicely. Here's NU. Right, Brazilian bank closing at new highs today. So again, some different things out there. I like to be in a few different groups, not all in the tech and not all in the AI space. All right, guys, that is it for today's video. Really nice trading day. I actually like today better than yesterday. I know it was huge for tech yesterday, and if you're all, if you bought the dip in tech, you're pretty happy based on what happened yesterday and the follow through that you got today. I actually did get back in a little bit back into Robinhood today. It is still, as long as it stays above this 5-period moving average, I'll look for this to retrace a little bit, and we'll go from there. I bought this on Friday and I took profits on it yesterday. So I like the way it kind of stayed above the 5-day moving average, and we'll see if we can retrace a little bit. Have a great night, everybody.